You might have heard or seen online that you can buy a home with just 3.5% down with an FHA loan. And it might have you thinking, this is the best way to buy a house, right? And since buying a home is typically the largest expense that anyone's going to have in their lifetime, people generally don't have a lot of experience with it. And they may not know the full picture or the downsides of using an FHA loan. But don't worry, that's why you watch my videos, because I'm Sean and I make real estate easy. And in today's video, I'm going to be sharing with you the 6 reasons why you should stay away from an FHA loan and try to go for a traditional mortgage instead. So the main reason why you would want to get an FHA loan is because you can buy a home with a low down payment. But the downside is that whenever you buy a home with less than 20% down, you have to pay something called PMI, or private mortgage insurance. This mortgage insurance protects the lenders and the banks in case you stop paying your mortgage. And this makes sense, right? If you're buying a home for $500,000 and you're only putting 5% down, the bank wants to make sure that their money and their loan is protected. So they're going to charge you a little bit more for this insurance premium, just in case you don't pay them back. So again, for a traditional loan, this is called PMI, or private mortgage insurance. You're going to be paying this fee until your equity reaches 20% of the home's value, and then it goes away. However, for an FHA loan, you have something called MIP, or mortgage insurance premium. They're basically the same thing, except that MIP lasts for the entire duration of your loan. So that means that this extra payment does not go away even if your equity reaches above 20% of your home's value. Now, this is a huge downside because you're going to be making this payment every single month for the next 30 years. And the only way to make this go away is to pay off your mortgage or refinance your mortgage into a traditional loan. And refinancing isn't free either. You still have to pay refinancing costs. And even if there's no upfront charges, that extra cost is going to be baked into your rate. So you're going to be paying more every single month for it. Now, the second thing that makes an FHA loan worse than a traditional loan is that they have stricter regulations and they're harder to qualify for. And the reason they do this is because they're trying to make sure that people only use an FHA loan to buy properties that they're going to live in, and these properties are in livable condition. So unfortunately, that usually means that you cannot use an FHA loan to buy a complete fixer-upper. And if the previous owner made some structural improvements to the home that weren't permitted, then there's a chance that the property can fail an inspection and then your loan won't go through. In fact, a couple of years ago, when I was helping some of my YouTube viewers find a home in the Bay Area to purchase, we occasionally walked through some amazing properties that would have worked as amazing house hacks because the previous owner made all these adjustments and had a bunch of different bedrooms and bathrooms to the home. But we had to walk away from those properties because we knew that they wouldn't qualify for an FHA loan. So since you can't use an FHA loan to buy these type of interesting properties or properties that have a lot of value add potential, you might miss out on some potentially good deals. And that leads us to point number 3. Since sellers and realtors know that getting an FHA loan has this extra layer of complexity to it, and they also have strict regulations in order to qualify for the loan, some sellers may prefer to go with another offer with better terms associated with it. So they might go with another offer that is only using a conventional loan or someone using cash over yours that may be a higher price but has an FHA loan attached to it. And they'll do this because they know that someone getting a conventional loan or using cash has a better chance of actually closing on the deal than someone that's going with an FHA loan that may take a whole bunch of time to qualify for, only for it to fall through at the very end. So by presenting your offer with an FHA loan, sellers may discount it and end up going with somebody else. Now, another problem with getting an FHA loan are the loan limits. There is a maximum amount that you can borrow with an FHA loan, and that depends on where your property is located at. And in a higher cost of living area, you may have problems competing due to this cap. So there's a chart that shows how much you can afford and how much you can borrow based on the location of the property. And as of this recording, you can borrow just under $500,000 for low cost of living areas and almost $1.15 million for high cost of living areas. Now, even though this seems like a really high number, it's still not enough to buy a single family home in a really expensive market like the Bay Area. So if you end up finding a home and it's going to take more than the maximum amount, then you're going to have to come up with that extra money for the down payment to cover the difference, which then defeats the purpose of getting an FHA loan in the first place because you're putting down more money. Another downside to getting an FHA loan is that there's an additional fee that you have to pay just for getting the loan in the first place. And this is called the UFMIP, or upfront mortgage insurance premium. But unlike MIP, which lasts for the entire lifetime of the loan, this upfront mortgage premium is something you pay right up front, and it's about 1.75% of the loan amount. So if you get an FHA loan for $500,000, then you have to pay an additional $8,750 to close on this deal. Now, how you decide to pay is up to you. You can either pay that $8,750 upfront right now, or you can bake it into the principal and then pay it off over the next 30 years. Now, the 6th problem with getting an FHA loan is that it's not even the best low down payment option. People talk about getting an FHA loan because they say you can get a property with just 3.5% down, which is very enticing for people who don't have a lot of savings. But there are actually 0% down payment options if you can qualify for them. For instance, veterans can qualify for a VA loan. This lets veterans who have served at least 2 years in the military to purchase a property for 0% down and get incredibly favorable rates. On top of that, VA loans also don't have PMI, so honestly it's the best loan you can get if you can qualify for it. And there are also 0% down payment options for certain high-paying professions, such as doctors, dentists, and lawyers. It's kind of weird, but certain banks will give these type of loans to these professionals because these people tend to have a high repayment rate. They know that these people have good incomes, but they understand that right after they graduate from med school or law school, they might not have so much money right now. So they offer these 0% down payment options to these people. And if you don't qualify for any of these 0% down payment options, you can always get a 0% down payment USDA loan if you purchase a property in a rural area. And if none of those things work for you, you can always go back to the trusty conventional 30-year mortgage. This is something that most people don't know about, and only I found out when I was trying to buy my own property. See, a few years ago, when I was looking to buy my property in Dallas, I was trying to buy a property with as little cash down as possible. Because at the time, we had a lot of our cash tied up in other projects, like a property that we bought with all cash and that we were doing a total renovation on. Plus, rates were really low at the time, so I was trying to get as much loan as possible with a low 3% rate. So I asked my lender if I should get an FHA loan, and he told me,
"Why bother? You have a high enough credit score, just go for a conventional loan and get one as low as 3% down."
So honestly, I was pretty surprised when I heard about this because at the time I thought that the lowest amount that conventional loans can give you is 10% down. But they actually have loans in the 3%, 5%, 10%, 15%, 20%, etc. And each tier of loan costs a different amount for closing costs, rates, etc. So after going back and forth with my lender, I realized that getting the 3% option really wasn't that great because of all the extra costs associated with it. So we ended up buying a property with just 5% down. So in my opinion, if you're gonna be buying a property with a low percent down option, just pay the extra 1.5% and don't bother with an FHA loan and get a regular conventional loan with just 5% down. Also, since you're gonna be getting a conventional loan instead of an FHA loan, then the PMI on the property will not last forever. Once you hit 20% equity, the PMI will drop and you'll have a lower monthly payment. So these are the 6 reasons why you should not get an FHA loan. And honestly, the main reason why you should even consider getting an FHA loan is if your credit score does not let you qualify for a conventional loan. So that means if your credit score is between 580 and 620, maybe go for an FHA loan instead of conventional financing. But if your main purpose is to purchase a home with as little money as possible, then I recommend spending some time today to boost your credit score up and go with a conventional 30-year loan with 5% down. Now, if you guys are planning on buying a home within the next year, then I highly recommend you checking out this video where I break down the entire home buying process. Thanks for watching, guys. I appreciate you, and I'll see you next time. Take care.